I turned bullish below 5,000. I turned more bullish. I was already talking about 8,000 on the S&P. I raised my target below 5,000 when everybody else was lowering targets and saying we're in the bear market now, the top's in. I said we're going to 8,700. So I raised at that time, and that's how I'm a contrarian. That's how I work. Is the sentiment got so negative, I got more bullish, and that's the same story here. Is that the institutions remain skeptical, and that what I call wall of worry is the fuel for the future advance. So what you don't want is everybody all in. Once everybody's all in, that's already been acted on. So the reason I'm so bullish is because, again, in spite of the fact that we're at all-time highs or very close to all-time highs right now, sentiment remains subdued, and that means there's plenty of there's plenty of fuel for future advance.
Right. Okay. So why, I guess then why would it have to end if you would? And I say that in context with the Fed lowering rates here recently. They cut it a quarter of a point. They're coming out dovish. I'm looking at the reaction. The bond market actually bounced up, or the yields. Oh yeah, the bond market's bounced up. Correct me if I'm wrong since then. But the bond market, which is surprising to me, is relatively very strong. Is that sniffing out this, if you would, what's to come after a parabolic? Is that sniffing out a correction? Is that sniffing out a recession?
No, what it really is, we've seen the rates move down from, say, I think they backed up to 460 or up in that range, and they backed down to maybe 4% on the 10-year,
Yeah.
very close to it. And then in the last few days, we've backed up to 414, 15, and could go a little higher here, but ultimately I'm calling for in the next 3 to 6 months, you could see rates certainly down towards 3% and maybe even below 3. And
Whoa.
then in from there, I can see a 0% 10-year in the global bust that I'm forecasting to follow this. So I think we've seen the highs in rates for a while, for at least the next year, 18 months. And it's pretty much that's gonna help fuel the market. Part of the reason the bond market's moving down is because the economy is slowing. Another part of it is because inflation, despite the Fed's worries and some on the streets worries, inflation continues to trend down. I think we will see, ultimately, we will see 2%, which is Fed's target, and then below that in the next year. I'm saying that the global bust that will follow this will bring on deflation. So we'll have truly the first deflationary downturn in 90 plus years. So everybody else is worried about inflation ticking up. I'm saying no. Yes, we've had a couple months of tick up or uptick, but really the trend is down and it remains down. So I think that if inflation's moving down, the Fed's been too restrictive. They've got to catch up. And as I always say, the bond market sees this stuff well before the Fed. The bond market moves. I'm not really worried about how many cuts we have between now and the end of the year. I'm not worried. I wasn't worried whether the Fed was going to get a quarter or a half in September. The bond market's going to take care of that. The bond market in its aggregate is a far better forecaster of what's to come than any Fed official.
Yeah, I would agree with that 100%. I used to run some money, and we would always watch the bond market in our models, if you would. But you just said the 10-year getting to 0%. That reminds me, I don't remember exactly what it was in 08-ish, 09-ish, but that reminds me of that time. And that was quite scary and violent, if you would. That's what you're saying. That's what we're headed into.
Yeah, so you can even go back less time than that and go back to 2020. The
Yeah.
10-year got down to 0.4.
Yeah.
So I'm saying we have one more lower low in rates, one more higher high in bonds, and then that'll be the peak of the secular bond, a bull market in bonds that started in 1981. So bonds in 1981, I think the 10-year was probably 15%, and it's come all the way down, got down to zero point 0.4, and in the last few years it backed up to 5%. And from here, I mean, from that 5%, I think we've begun the next leg down that will take us down and ultimately take us to new lows. It will be as a result of a very bad economy globally, not just in the U.S. I am calling for a bust, which I define as something bigger than the Great Recession, but not drawn out like a depression. So it will come with a financial crisis that I think will be bigger than 2008-9. Again, globally. So some of that damage, banking failures and bank failures around the world, et cetera. I would guess from a banking industry standpoint, the banks overseas are in more trouble this time, whereas we were the lead in 2008. So I think European banks are not. We got some religion because of what happened with subprime and our banking crisis in 2008. Unfortunately, Canada was in good shape then. Canada's made all the mistakes we made back then. They're in much worse shape now. They're much more leveraged and extended. Europe's not in good shape. Obviously, the Asian banks aren't in good shape. We don't know what's going to go on in Japan. But my take is, as a longtime monetarist, you can't keep doing what Japan did without at some point inflation breaking out and interest rates breaking out, and they have no room for error over there. So that could be part of the bust. Is the wild card is Japan, I think.
No, you're talking in deflation here after a parabolic. We're assuming I mean, quite possibly have a parabolic spike up, but you're talking about a deflationary time in 26. Where does a person hide? Because that's the problem with deflation. There's really no place to hide except in cash or in really in bonds, right?
Yeah, frankly, it's about right. I'm calling for an 80% bear market, stock bear market. So peak to trough, we had a 90% decline in 29, 29 to 32. This one I think isn't going to be quite that bad, but 80% peak to trough would be the biggest since then. So that certainly means you can't hide in stocks. Um, you can't really hide in lesser quality bonds. Even investment quality is going to be in trouble because the economy is deteriorating so to such an extent. So it means treasuries are pretty much the only game in town in the bond market. And if I'm right that we moved from 4.15 here down to zero, obviously that's a big gain in the bond market across the curve from T-bills on up to 30-year. I expect the treasuries to outperform everything else. It will be obviously T-bills won't give you much upside, but it'll give you something, and the long bond will give you a lot. So I think bonds are about the only thing that's going to move up in this. FDIC insured savings accounts because the FDIC will be provided whatever funds they need to meet their liabilities. So I'm not worried about that not working. Obviously, if you're in institutions beyond the insurance limits, you're at risk. We don't know exactly what will happen there. Money markets last, 2008, they had the we won't break the buck. They backstopped the money markets. My guess is they'll do the same thing again, but we don't know that at this point. So there's some risk in money markets, probably not a great deal as long as you're in pretty good quality ones.
Okay, got it. Well, talk to me about where does gold fit in all of this? I know you're on record. I want to say gold at about 4,000 this year. And I want to say you were calling silver around 75 or at 75 that it could potentially get there. Do you still see that happening in this malaise, or is that part of the parabolic? Where does this fit in your deflationary scenario?
Yeah, those are still my targets. I think we will see those. They don't necessarily have to be totally in sync with the stock market. So the stock market could top out before the end of this year or early next, and precious metals might go, a couple months beyond that. But those are my targets. I think I'm probably going to be proven conservative on those targets. So gold at 4,000. I may have to raise that. We're not that far away, frankly.
We're right there.
Um,
Yeah.
silver's quite a bit away from my target, but I think as we saw in 2011, when silver gets going, it gets going in a hurry. So if you want to talk about a parabolic, that can go that way. So I'm pretty comfortable with both those targets. Like I said, I may have to raise my gold target.